Welcome back to the next bootcamp part. Today I'm going to talk about order blocks, which are similarly important as the fair value gaps, even though I like to use fair value gaps more than order blocks. But before that, I'm going to show you something I worked on. So this was the Discord I was working on, and we're actually hosting a giveaway just for the start of the Discord. I really want to grow it now. And if you want to join, you can learn a lot from trading. Here are people that are funded, and me as well. I will be answering every question. But if you want to participate in the giveaway, it will end on January 14th. So just join the server, link is in the description, and see you there. So back in the charts, order blocks are kind of simple to understand. If there is like an impulsive, not even impulsive, just an up move, and then there's an impulsive down move, like a really impulsive down move. This up move before the down move is the order block. And it works normally because it took a liquidity, like here, here. Oh wait, I can't really draw it like this. Let me take the fucking path thing here. Okay, we have like this, we have like this, we have a thing that takes out liquidity, then an impulsive move. Then normally this would be our order block. So if it goes back in here, similar to the fair value gap, it's more likely to go down again. And yeah, that's already it. We're gonna go look at it in the charts. It's just an area where the orders got filled last time because price went into this area and like it took liquidity, and then there was like a point where it went down. So this is like a price range where the banks thought it's a good idea to completely sell, like push the market to the downside. So that's why there's probably like there's a higher chance of it happening again if it goes there. I hope you understand that. So let's see, where's an order block? I mean, already this here. You can see it took a liquidity. That was the last move before the impulsive down move. You could take this whole thing. You could also take like this. There's like different options. You just have to see what reacts to each other. What reacts to the other. But I would see this as a better order block than this. Since this is kind of like a, I call it a breaker, but I don't think it's a breaker. It's just how I call it. And it's because there was like the order block thing here, where it went down, then it broke that really quick, like here, and then it continued the impulsive trend. So I see this as a breaker and this as an order block. But yeah, let's go on higher time frames. Let's see. You can see here impulsive up area and impulsive down, so that's probably an order block, and it reacted to it right there. If you go into 50-minute, we'll see a better one. Like this is above the sweep, kind of, and it reacted to it. Like this whole thing, you know? Also took liquidity here. But yeah, let me see better ones. As I said, I normally don't use order blocks. I can still teach them, but if you really want to master it, you shouldn't watch this. This is just for the simple stuff. So yeah, it took liquidity here. This was a market gap, so it's like hard to see. I'll go forward a little bit. We have a big order block here, since up move, impulsive down, but it reacted to the fair value gap. Let's see. Okay, now it's in the order block. Oops, not this. Like 1 hour. And you see how it reacted to the order block, because this was the last move for the impulsive down move. So just mark the whole thing, and this is an area where it's more likely to react. And now again, it already reacted to it actually here. The last down move before the impulsive up move, it reacted to it here perfectly, went up into this order block, and now it's going down. Disrespecting this order block, which means it probably hunts for something way more down, since if it disrespects something, it will probably hunt for something like in the opposite direction, since there has to be impulsive movement going through that. But the thing is, this was already mitigated, means it already is used here, so I wouldn't see that as a good disrespect, but I still think it will hunt for this. But since we just had such an impulsive movement, that probably retraces now a bit, and then we want to see what we're gonna go over in the next parts, that it goes into premium or discount. So we wanted to react to something above this, and as we see here, an order block again, but only the part that is above the 50% mark here, where it's probably hunting for, or instantly goes for the liquidity. So yeah, this was already it about order blocks. If you have any questions, you can easily ask me on Instagram or just on the Discord that is linked in the description. See you next time. Bye bye.